We're seeing a lot of political turmoil in Washington, yet the market continues to ignore it. What, if anything, will change that?
I think what could change the market's outlook toward politics is something that could really meaningfully change the economic or tax or regulatory outlook. It's been very rare that the market's reacted to all the various stuff that we're seeing. It's certainly a spectator sport in and of itself. People who are watching all the hijinks going on and between the Supreme Court confirmation and all the various comings and goings in the cabinet and other Washington officials. But really the market's ignored it. Essentially, it got its regulatory reform, it got its tax cut, and until or unless something upsets that outlook, the market's probably going to continue to ignore politics in a broad sense. We did see politics intrude a little bit on Monday of this week. As the rumors swirled and there was a lot of uncertainty, was Rod Rosenstein resigning or not? The deputy attorney general position is not one that is usually a market mover, but considering that he is sort of the keeper of the Mueller investigation, that would really have the potential, if he were to leave, to open a whole political can of worms, and that still is yet to be resolved, and there's more talk about it being addressed on Thursday, and I guess we'll have to see how that comes out. The headlines certainly don't look good, but for the most part, the market stayed away from politics. I guess the reason the market is sensitive somewhat to changes in the Mueller investigation is that really could change some of the calculus that I've discussed earlier. Because if you start to talk about an administration that spends the next couple of years on the defensive, that really inhibits a lot of the market-friendly things that we've seen come out of Washington in the past 2 years. By the way, that is just looking backwards at the market. I'm not making a political statement necessarily, but remember, markets like less regulation and they like paying less in tax. One of the worries, of course, is when does that bill come due, and that's a whole topic for another time. But as of now, let's just stipulate that the markets really do like a reduced regulatory climate, and companies have gotten a huge tax break, which has been a lot of which has been piled into buying back shares, and that's propelled a lot of the buying that we've seen in the market. Some will argue that stock buybacks really have been the marginal buyer in the market over the past several months. So going back to the political outlook, I think a lot remains to be seen as to how things transpire on Election Day in November. I don't necessarily think it's the kind of thing that lends itself very well to a trade. The reason being, I think the markets have really started to discount the fact that the House begins to go Democratic, and that really reduces the Republicans' ability to move legislation. But realistically, they haven't moved all that much when they've had control of both houses. And so I think also markets over time tend to like some gridlock. I think they don't like being exposed to impulses one way or the other that don't have a lot of checks and balances upon them. So all in all, that's probably an okay scenario from a market point of view. If you start to throw the Senate into play, which there are rumblings that the Senate could go Democratic as well, that could present a problem because you really could have, in many ways, a president who feels cornered, and it's not clear how he would react in that situation. And do we end up with government being a sideshow or government being a friend of the markets? And that's a scenario I think we don't want to deal with. I think unless we get to that scenario where government becomes a sideshow to the detriment of the economy and the market, I think otherwise the market will continue to ignore politics. It's worked for the market so far. Why change what isn't working?